All right, let's talk MindWalk, ticker HYFT. Their last quarter was a real head-scratcher. On one hand, you had record revenue, but on the other, a pretty big miss on earnings. We're going to deconstruct exactly why the stock soared in the pre-market, then slammed on the brakes, and figure out what it all means from here.
Okay, so let's get right into it. The headline numbers here presented a classic good news, bad news situation for investors. The bad news? A miss on earnings per share. The street was looking for a 1-cent loss, and it came in at a 5-cent loss. But the good news was pretty great. Revenue came in at 4.1 million Canadian, a massive 54% jump from last year. So right away, you're asking yourself, what's the real story here? Is it about high growth, or is it a profitability problem? And you can literally see that confusion play out on the stock chart. Before the market opened, traders were loving that revenue number. The stock was flying up 11%. But then, the opening bell rings, the conference call starts, and poof, all that excitement just fizzled away, with the stock barely finishing in the green. So, the billion-dollar question is, what did everyone hear on that call that gave them cold feet? Let's unpack that. To really get what happened, you have to look past those initial numbers. Management used this call to lay out a whole new strategic vision, and it all revolves around this idea they're calling bio-native AI.
If you just peel back that one bad number, the EPS miss, the actual engine of the business looks stronger than ever. We already saw the revenue growth, but look at this. Gross profit was up a whopping 94%. And even better, their gross margin expanded by a massive 1,400 basis points. That tells you the fundamental business is getting way more efficient and profitable, even while they're investing in this big new strategy.
So what in the world is bio-native AI? Well, think of it this way. Most AI is like trying to read an entire encyclopedia just to understand one sentence. MindWalk's platform instead focuses on what they call HYFT patterns. These are like patented, unique biological barcodes that tell them exactly what a specific gene does. It's a massive shortcut to understanding function, and they're betting the farm that this is their key competitive advantage.
And look, this isn't just some theory they have on a whiteboard. They're actually putting this platform to work creating real assets. Take their GLP-1 program. Yep, that's the same red-hot field as drugs like Ozempic. They've already designed new compounds that, in the lab, are showing better results than the active ingredient in those blockbuster drugs. Or how about a universal dengue vaccine? They've used their AI to find a critical pattern across all 4 types of the virus. These are real, tangible starting points for new medicines.
Now, having a promising pipeline is great, but in biotech, it always leads to the big, scary question, how are you going to pay for it? Well, MindWalk thinks they have a really creative answer when they claim won't water down the value for their current shareholders. And here's the game plan. It sounds a little complex, but the logic is actually pretty smart. They're using a special legal structure in the Cayman Islands. First, they take each one of their AI-generated assets, like that GLP-1 program, and put it into its own separate legal box. Then, they can go to a big pharma partner and get them to invest directly into that specific box. And here's the magic trick for shareholders. The development gets funded without the main company, HYFT, having to print a ton of new stock. The CEO, Dr. Jennifer Bath, was super direct about this on the call. She said flat out that this whole structure is designed to protect existing investors against dilution. They are hammering this point home over and over again. They have a plan to grow without hurting their current shareholders. But of course, there was an elephant in the room. Someone on the call pointed out that the company has a $30 million ATM facility ready to go. Now, an ATM is basically a mechanism to sell shares directly into the market, the exact kind of dilution they say they want to avoid. So what was management's response? They said, look, that's just our backup plan. It's there just in case. They stressed that they haven't used it and that their main focus, their plan A, is still that non-dilutive funding structure. Okay, so we've got the new strategy and we've got the funding plan. So what happens now? That brings us to the next big event, the catalyst that every investor is now focused on. The road ahead is actually very clear. This earnings call is in the rearview mirror. Now, all eyes, and I mean all eyes, are on the JP Morgan Healthcare Conference next month. You have to understand, for a company this size, JPM is the Super Bowl of biotech. It's their biggest stage.
So, this really frames the entire investment case for the near future. It all comes down to a single question. What exactly are they going to announce at JP Morgan?
And believe me, the market has a very specific checklist. The time for just telling a good story is over. It is now show me time.
First, investors want to see clear timelines and milestones for those GLP-1 and dengue programs. Second, they need more concrete details on that Cayman funding structure, and ideally, maybe even hinting at a potential partner. And third, and this is the big one, they need to see hard data that proves the bio-native AI platform really works. The narrative is set, now it's time to deliver the goods.
All right, let's bring this all together. It's time for the next call, our final analysis of the quarter, and our official rating on HYFT.
After digging through everything, we're initiating coverage on MindWalk with a market perform rating. Here's the bottom line. They have a fantastic, really compelling AI platform story, but right now, that's being completely offset by the market's need to see them execute. So we think the stock is likely going to be stuck in a trading range, kind of in limbo, until a real catalyst shows up. And that next driver is crystal clear. A successful presentation at JP Morgan that includes partner validation or actual signed, non-dilutive financing deals. That's what will get the stock moving again.
And as always, a reminder that this is for informational purposes only. This is not financial advice.